Credit Suisse is currently under a lot of pressure. Throughout this video, I'll be helping you understand exactly what is going on in this situation in 3 easy to understand steps. So first, we're going to go over the letter that the CEO wrote to the employees on Friday of last week. Then we'll go over the current stock price of Credit Suisse. Lastly, we'll talk about credit default swaps. I'll actually break down it in a very, very easy to understand way so you can kind of conceptualize all this and then make your own decision as to how you're going to position your portfolio. And this is just kind of one of the many powder kegs we're currently seeing in the global economy. 2022, this has been a very interesting year and it's not quite over yet. We just entered quarter 4. So to start it off, the CEO wrote a letter to employees on Friday, very similar to what we saw in 2008 with Lehman Brothers, where 4 days before Lehman Brothers actually collapsed, the CEO wrote a letter saying our capital positions are strong. It doesn't matter public sentiment, stay strong, basically kind of encouraging this narrative of, all is well, right? Not kind of like adding blood to the water. So the Credit Suisse CEO wrote a very, very similar letter, basically saying our capital position is strong, almost the exact same, kind of echoing this. Now, that's not necessarily the only indicator here, kind of showing what a lot of people are thinking, which is Credit Suisse could bust, right? This would be a major, major issue. It's the 9th largest bank in Europe, a lot of assets under management, a lot of employees, and not the best track record with scandals. There's a lot of different scandals kind of with bonds and all these different things. But essentially what he was saying is, ignore the stock price, which is at all-time lows, and really focus on this capital position, right? And it's true. I mean, Credit Suisse, if you look at purely the capital position, they're still looking quite good. However, this is something that's, echoes these past things. So next, we'll move on to currently, trading at all-time lows. The Credit Suisse Bank, this stock price is very, very not looking good right at the moment. And today it's up a little bit. However, I currently think that this is going to keep declining, and it's one thing that really is kind of scaring a lot of people, right? One of the things that happened over this weekend actually is a lot of people from Credit Suisse kind of called a lot of the larger shareholders, a lot of people that actually utilize Credit Suisse customers, if you will, telling them all is well, all is fine, kind of reinstating that first point with the letter to the employees. And then lastly here, these credit default swaps. This is really, really interesting to understand because essentially, Lehman Brothers actually was very similar with credit default swap, except it was more in the real estate space, right? So with credit default swaps, it's essentially insurance. It's like a very, very kind of boiled down way of explaining it, but people lending money. So Credit Suisse is very, very leveraged, right? So how do you gain leverage? Well, someone is lending you money, right? And what is the insurance on that? Well, that is kind of where credit default swaps come in. And basically, today, actually, it's quoted they're hitting around like 450 basis points with new credit default swaps. So that basically means per every $100, you have to pay $4.50 per year, okay? So per every $100, you have to pay $4.50 per year, right? So and these are like 5-year spreads. Now, the spread, as it increases, basically means the risk of defaulting is a lot higher. So as that number increases, the risk is a lot higher. Credit default swaps, I might make a very dedicated, pure video on just credit default swaps because it's actually quite interesting. A lot of people don't really understand it unless you're in the corporate finance or banking world. But they're actually incredibly important, especially I think, when we're talking about a recession, collapse. Credit default swaps is something that's interesting to watch. And, this has really spiked up. The last time it was this high for Credit Suisse was actually in, I think, 2009. And for example, Lehman Brothers, before, or really during the crash, it went up to around 700. So that would be $7 per 100, right? So per year. And this is one thing where some other banks, for example, like these banks that we still know today, besides Lehman and Bear Stearns, where they actually busted, also had incredibly high credit default swaps rates, right? So that they were incredibly high, but they didn't bust, right? So there's always a chance someone will come and bail them out. Someone will kind of help protect them, get through these times. So the credit default swap in and of itself, or any one of these key factors in and of itself, does not mean that Credit Suisse will go bust, right? All of these things together don't paint the best picture. However, I do think public sentiment is incredibly bearish, right? So usually public sentiment is pretty black and white in my opinion. But the point of this is to kind of objectively understand what is going on here with Credit Suisse. Again, they don't have the best track record, so some of these things beyond these kind of 3 main points, so like I talked about, there was that letter the CEO wrote to the employees, basically explaining that don't focus on the stock price, don't focus on any of these things, our capital position is very, very strong, then, stock price is trading at all-time lows, obviously kind of objectively not the best thing, and then beyond this, credit default swaps on Credit Suisse have really risen, right? So in that quoting or bidding of 450, let's see if that will actually materialize this week. But it's not looking good, to be quite honest. It's really spiked up, and this is all kind of in light or on the back of last week on Wednesday. The Bank of England actually came out and to protect pension funds, actually did a bond buying program. So they did $65 billion worth of bond buying. This did not help the situation at all. This is something that basically it's a bit more complex. Maybe I'll cover that in another video, but it doesn't help Credit Suisse's position because it just paints a much worse picture. And actually the Bank of England kind of pivoted on that decision because originally they were actually going to sell bonds, but to protect pension funds, they had to do this. So that's basically all for Credit Suisse. I wanted to make this a very short video, concise, to the point. Hope you guys understand. And as far as positioning your portfolio in these times, I think looking at real hard assets and looking at becoming your own bank, things like gold, things like silver, precious metals, rare earth metals, potentially mining companies, looking at the energy space, really hard assets, right? Those are the most important things. Becoming your own bank, right? What does a bank have on their balance sheet? What do you have on your personal balance sheet, right? And assets. Besides savings, cash, those things, what are you holding, right? What will hold through the storm? Kind of building yourself a Noah's Ark, if you will. That's kind of the whole idea. I'll talk about that much more in videos to come, but I did want to mention that the previous video I did on the War of the Heartland, what I'll be doing over these next series of videos is talking about, at the end of that video, I talked about these kind of 7 powder keg things, which this you could add to the bunch there, but the 7 powder kegs, I made the video on Europe's energy crisis. That's a massive, massive issue, but there's a lot more coming, right? So there's Japanese yen is in really, really major trouble. There's the China situation with the housing market. The US is incredibly over leveraged. There's the Russia-Ukraine situation. So there's a lot going on. Over the next series of videos, I'll kind of be talking about those. But if you guys understood what is going on here, please let me know in the comments. Let me know if there's anything I can improve. I'm always looking to iterate and improve, change up the videos as I go along. So thank you very much for watching. If you enjoyed it, like the video, subscribe to the channel to stay up to date, hit the notification bell, click all, invest global, and until next time.